Hello, everybody. So I can't have a Sunday without my routine MSTR videos. At this point, I do these for my enjoyment. Sunday night now in Europe. Let's talk about strategy. Strategy, title of this video is Blurry Start. A blurry start. Why do I say this? Blurry start of 2026. Why do I say this? Because Saylor tweeted 2 hours ago, orange or green? Question mark. And at this point, I think Saylor is just having fun with us. Remember, there's so much FUD against him. His whole life, he's been, all about fear, uncertainty, and doubt. Back in the 2000s, people doubted him. People have doubted him so many times. He's failed at many ventures. As he always says, there's two ventures that matter for me. It was MicroStrategy, right? Business intelligence, and then there's Bitcoin, and then I'm done. That's all I'm doing because he's failed at other ventures. So he's just having fun with it, and he probably gets flooded all the time. And so he teases us. And so I think this is teasing from him, orange or green. This is teasing for him. My guess, it's either green or nothing, and I'm thinking a little bit of green. Why? Because he's closing Q4 this week. Now, there's always kind of a difference between which week they actually file the SEC forms. But usually this time of year, we have a week where he doesn't buy. I think it's going to be next week. Not so sure, but it doesn't really matter to know this early on. He's closing the books. There are regulations which make it so you can't really have an 8K while you close the quarter. So my guess is that if he stacks anything, it's going to be cash and perhaps interest, perhaps a little interest on the cash reserve. Let's remember he has billions now in the cash reserves. He has billions now, so maybe it's what it is. What I love the most, though, is I'm giving you my guess. He's teasing us. What's great is that we don't know. And not knowing is pro-volatility. When you can't predict, this is pro-volatility. This increases the volatility of the stock. The more volatile the strategy, MSTR, right, ticker symbol MSTR stock, the more volatile it is, the higher the options premium, the greater the derivatives market. You want that vol. He's playing with us. He's doing pro-volatility tweets. Either way, I think there's going to be a nothing burger announced tomorrow. If anything, I think it's going to be very small. Anyways, a few more things. So about Bitcoin. Happy birthday, Bitcoin. Of course, that was yesterday's 17th birthday of Bitcoin. Happy birthday, Bitcoin. Quickly about Bitcoin. I'm not a fundamental Bitcoin channel, but Bitcoin is anti-fragile at this point. At this point, any crisis makes Bitcoin stronger, right? That's what we saw. The dominance. Late 2025, Bitcoin dominance just went up compared to all of the altcoins, right? I mean, Ethereum is not doing too well. Cardano is not doing too well. Even Solana is not doing too well. Bitcoin relatively is doing much better, which means that when there's a crisis, Bitcoin is doing relatively better, and it's becoming an anti-fragile asset, which means that when there's a crisis, when there's an issue, actually this asset outperforms the rest of its sector. At this point, I believe Bitcoin is unstoppable. There are too many nodes around the world. I guess I'm not a long time, but like a medium time Bitcoiner now. It's crossed my mind before to run a node. I mean, that's one of the geekiest, funnest thing you can do. I can tell you, there's people who don't own very much Bitcoin, but they like the idea of running a node. If you do run Bitcoin knots, but there's thousands, who am I kidding? I think it's tens of thousands of nodes. If you follow the technicals, you can follow the nodes. Even if you have no more internet, as soon as the internet reboots, the nodes go back on to the latest version. There's too many miners who write the blocks. The miners write the blocks. There's too many writer of blocks. I don't know why I call them writers. That's funny. But they expend all of this energy, and so if you expand so much energy, I think the cost of energy is slightly under the cost of Bitcoin, but still to mine a Bitcoin, you gotta expend something like 70 or 80,000 worth of electricity at like 3 cents a kilowatt hour. So if you spend that much energy, you're not going to falsify the blockchain. You're not going to publish a fake blockchain just to know that you would essentially lose the Bitcoin because there would be a fork. So there's a built-in incentive against faking. Mining uses thermodynamics, proof of work. Proof of work is a very, very solid system that, kind of incentivizes righteousness. And I also want to talk about, of course, it's not a Bitcoin technical channel, but this comes up a lot in the comment section more than a few times lately. People tell me, oh, quantum is going to kill Bitcoin. So quantum is a bi-yearly FUD at this point. Every 6 months, we hear about quantum, killing Bitcoin potentially. I just want to be very clear. Quantum is not a problem. Quantum is only a problem. Well, first of all, if you crack SHA-256 algo, encryption algorithm, if you crack that, it's only a problem for early wallets. It's not, if you have a wallet after 2015, even after 2013, you don't have that problem. It's a problem for very early wallets. In the very early days of Bitcoin, they had public keys. You have a public key, you have a private key, but your public key is technically private unless you've spent twice, unless you've received and spent from the public key. If you've spent twice from the same key, then that public key becomes public, broadcasted to the blockchain. And if you have a public key that is public, so twice public, I know that sounds counterintuitive, but if you have a public key, that's when potentially a quantum computer could crack the code and unlock your Bitcoin. And so that's why, as Saylor has said, I've said it many times, it's about maybe 5 or 6 million Bitcoins that are at risk. All of them super early days Bitcoin. Satoshi's Bitcoin are in there, by the way. Million Bitcoin are in there. So when they fork the network, when they move to a new version of the network, when they quantum-proof the network, what will happen is that you will probably freeze Satoshi's coin, and you will freeze all of the coins from 2010, 2011. All of these super old coins will be frozen. And that's it. And there's nothing you can do. You won't be able to access these coins. Maybe the Bitcoin Foundation or maybe some conglomerate of Bitcoin as a committee just in case somebody emerges from the dead, like 100 years from now or something. I'm making a joke about Hal Finney, who's frozen in Arizona. But you get what I mean. You could see the Bitcoin Foundation have a committee just in case. But at some point, they will stop the blockchain and we will move from 21 million coins to 16 or 15 million coins. As Saylor says, we won't really know how many Bitcoins have been lost, but once we quantum-proof the blockchain, it will be quantum-proof. But for the average Bitcoin users, for the average person, this is a no-brainer. This is a nothing burger for the average person. For anybody who's bought Bitcoin within the last, 11 or 12 years, this is not a problem. This is really only a problem for very, very early days wallets that used paper wallets and paper wallet generators. This is not something that most of us have even encountered at this point. If you have cold storage Bitcoin through and these are old by the way, Trezor is a pretty old software, Ledger is pretty old. If you have cold storage Bitcoin through any, legitimate early days wallet, you're good. There's no impact because it's been best practice to not advertise a public key on the blockchain. This has been a best practice for more than 10 years. So people who make this FUD, they haven't delved into the technicals. And that is my take. That is Saylor's take. That is everybody's take, roughly, people who follow this space. Anyways, moving on to another FUD. We're moving from FUD to FUD. So quantum FUD, I would say debunked. MSCI FUD, this one. Frankly, only the headlines scare. What's very annoying in the headlines about MSCI is they're right. Oh, MSCI and over indices, and it's just the journalist when they say and over indices. That's just an editorial choice, right? And so this if you go back to the Greeks and the method of arguments, this is a method of you associate something that don't have anything to do, but because they are the same thing, you're saying it's the same thing. Anyways, it's a method of argument. But yeah, if you put MSCI on QQQ and you put the same together in an article, you're creating a FUD, but it's entirely different. MSCI is a committee-based sector tracker that puts up lists for indices, right? For index funds, mutual funds, right? It's the smallest. It's not the smallest, it's much smaller. It's very, 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 very much small. As far as the market is concerned, a committee-based tracker, the only committee-based tracker that matters is the S&P 500. And the S&P 500 is very much anti-strategy. The S&P 500, the committee of S&P 500, I was pleased, by the way, to see the strategy committee not make that much buzz about potential inclusion in December. To me, S&P 500 inclusion will happen very late. They were very late to add Tesla. They will be very late to add strategy. To me, maybe in 2030, we see the S&P 500. As far as volume is concerned, for us, owners of strategy, there's one index that matters the most, and it's the QQQ. It's the NASDAQ 100. It's the NASDAQ period. If you follow the investment community, the NASDAQ has so much more praise now than the S&P. Over the past 5 to 10 years, the NASDAQ is the big kahuna. It is the biggest index, and it is fully rules-based. There's no humans in the loop. We're not leaving the NASDAQ. Hence, if we're not leaving the NASDAQ, this is a nothing burger. Also, rules-based total world index funds, of which all major companies have, whether it's Schwab or Fidelity or whatever, we're not impacted by that at all. These also tend to be rules-based. MSTR is always going to be a top-ish stock in that, anywhere between 0.5 and 1%. It's always going to be in there because these are rules-based. These are not committee-based. These just take all of the U.S.-listed stocks. Let's say you have 7,000. Okay, I don't know. Is it 5,000, 6,000? Thousands of them. You put them all in a bucket and you do a total index fund, market cap weighted. This is not impacted. I think MSCI is mostly there to get the clicks, mostly there to get the headlines. To me, it is a nothing burger. Plus, let's not forget that Saylor sent a letter. It was a pretty good letter. It's possible it doesn't get excluded at all. It's possible it just stays, and if it stays, either way, it's FUD. Like it's entirely pointless. Oh, and the last point, of course, is we're moving away, folks. We're moving away from common ATM. Like we're still in the era of a common ATM. He's still ATMing, but as soon as Stretch reaches 100. I expect him to go full steam on Stretch. And that may come as early as tomorrow, Monday, right? It can come Tuesday or something. But we are getting pretty close on Stretch. We're what was it, $9.50? A little bit more than $99.50. So we're gonna get pretty close. And once that happens, I wouldn't be surprised to see Stretch really quickly get $100 million a day. And so at that point, the indices don't matter no more. It doesn't matter because you're not relying on those flows. Saylor is going after the debt flows. The next version of strategy is going after the debt. It is replacing cash flow based debt. A company issues a bond. Walgreens issues a bond because they want to set up a clinic in their pharmacies, and they issue a bond. Starbucks issues a bond because they want to renew the stores. Cash flow-based bonds, right? Or government debt or mortgage debt bonds, right? Banks issue bonds based on their portfolio of mortgages. It's moving from that debt, which is uncertain. Cash flows can go away, right? Government, every other year, threat of government shutdown. These are risky stuff. He's moving away from that and saying a Bitcoin-backed bond is the best thing. A debt, if you own $100 of debt and the company has $500 worth of Bitcoin backing that debt, that's a BTC rating of 5. If you own that $100 of debt, that should be considered very, very, very low risk debt, very low risk debt, because you just lent $100 to a company who has $500 in Bitcoin backing that $100, that $100. That's the future of strategy. So even this conversation is pretty moot, if you ask me. This conversation is no biggie. Finishing up this video, talking about Venezuela, post-Venezuela money flows. Again, thank you for all the comments. People in my comment section talking about an apocalypse coming on Monday. I know the market is nonsensical. I mean, I'll be the first to tell you, I don't know what's going to happen on Monday. But if I try to infuse any little sense, to me, and I look at the price of Bitcoin right now, to me, this Venezuela thing doesn't really have much impact on Bitcoin and risk assets. To me, it's all about oil. Venezuela crisis is all about oil to me. I think it's going to be a negative for shale oil. All of the West Texas oil, all of the WTI, all of the inland U.S. oil. I think it's going to be a problem. I think it's going to be a problem for Canadian oil, right? Canadian oil, may see lower demand as US shifts back to the Gulf Coast, right? And shifts back to ship coming from the Gulf. And we know, they inverse these big pipelines. They used to have pipelines from the Gulf going into the US. Now it's pipelines from the US going into the Gulf. They might inverse back those pipelines again. Who knows? But I think it's going to be a big positive for US-based, oil like Exxon and Chevron, who all of a sudden might get access again to very, very, very cheap, very high quality oil, which is the big deal about Venezuela, is they have very high quality oil that requires little refining. And so I think that could be a big positive for companies like Exxon, Chevron. But I think this mostly will impact value stocks and the flows of value stocks. And people, of course, who own oil companies probably don't think much of Bitcoin, probably don't think much of strategy or HIMS. They probably don't like these stocks as much. So I think it's going to do a shift in a lot of the value sectors, but I don't think it's going to impact BTC that much. And I would say overall, this is a positive for the US. Overall, this is, no joke, right? But overall, this is a pretty big positive for the US. And so as far as stocks, this should be good for the economy as far as stocks. And of course, this is my area, right? Stocks. Like I don't know about all of the geopolitics, but about stocks, I think this is going to be fairly positive. So FUD to be expected over the next few days, of course, but I don't think it's going to impact our portfolios. I think it's going to impact more like value-oriented portfolios, like pipeline stocks. You might see some things happen. Anyways. This was not investment advice. This is not financial advice ever on this channel. This is only entertainment. I'm hoping you're entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.